you.
Come on in. Well, we have somebody with us today, Kevin Perkins from Up Closets, that has your solution to that. Come on up, Kevin.
All right. Thanks, Keith.
And I'll just kind of,
All right.
through your cues,
Yeah.
go through.
Hi, my name's Kevin Perks from Up Closets. We're a local company. I started out of my home right at Benson and 1010 right here in Garner. And I want to talk to you a little bit about that. As Keith said, people, whether it's a new build or moving in, closets are a lot of disappointments out there, right? Production builders don't want to do much more than the wire shelves. That's a major problem. Say don't want to do wire shelves. But we'll talk a little bit about that and what sets us apart. So this is my family. Again, I'm local here. My youngest daughter got married in January, so we just got a family portrait. And there's some of the universities that we have sent our money to over the last 4 years. And then a little bit about us as a family. Again, here's my dog. I got the dog running around. That's not my bear, but that's out of Alligator River and taking some pictures. One reason why I started this business is because the last 20-25 years I've been building a lot of fine furniture. And I said, what can I do? I was leaving the corporate world, worked at Red Hat for Red Hat and NetApp for the last 15 years. I said, what can I do that kind of leverages the design and build experience that I had accumulated as a hobby, and also scratch that entrepreneurial itch that I wanted to scratch. So I looked at this and we started Up Closets. There's my beautiful wife looking at some of the work. But you can see here they're modular, right? So they come flat on a pallet, all custom built, all custom cut, and then custom built on site, right? And then so what do we do, right? So we fix closets problems, closet solutions, pantries. There's a nice butler pantry. There's a laundry room. There's kind of a couple of office spaces or the kind of living room. This has seemed to be really popular, right? A kid's closet as well.
I didn't even think about pantries.
Pantries,
Same
yes.
thing.
Pantries,
usually a big pantry with a wire shelf, and that's about it.
And garages, right? Yeah. So any storage space, we'll do it. Mudrooms also is another solution that we solve. So why work with us? We do offer referral bonuses. So if you're working with a client and they want to sell a house and they want to, do some get really good ROI upgrades so that their house can be differentiated and get a premium price, that's something they do. We take pride. I'm the owner, so I'm going to be on all the installs as well as intimately involved in all phases. There's no price gimmicks with us. When we sit down with the customer, we build it out with them on our computer, and the price gets updated as we go. And so there's a lot of competition out there, and they play a lot of pricing games. Our pricing is very transparent. So superior product. Our product is made out of what we call TFL, thermally fused laminate. Some people say, hey, I can go to IKEA and get it cheaper. Yeah, you can get it cheaper. You also give up a lot on quality, right? There's products out there that are thinner. They're made of melamine instead of a thermally fused laminate. And just like anything, you get what you pay for, right? And just most of our stuff comes out of Alabama. So we're pretty immune from what's going on in the environment. It's all American made. And, we do full service, right? We take care of the measuring, the design, the implementation, execution of the installation. And what we also say, our price includes light demo, right? They got a really elaborate system that's going to take a lot of, demo and retro work. And it's like, that's not included, but it's just wire shelves, pull it off the wall, do a little patching, a little painting, we did there. So, all right, good. So there's basically 5 steps as far as the process. First is schedule a free consultation. We come up to your house, we do the measurements, we sit down with you and do do the custom design, right? Step two, that's 1 and 2, right? Schedule the consultation. The consultation is including the measurement and the assessment. Step 3, well, we got 2 steps 2, so no step 3. Custom 3D design on the spot. So, we have no pen and paper other than the initial recording of it. Sit down with the computer, the CAD program. And I love that process because it's a lot of back and forth between us as the designers and the customer giving their feedback. It's like, well, that's not important to me, but this is. Like, okay, we can change it. It's like, well, I want it on this side versus this side. It's like, great, let's flip it, no problem. So we can do all that interactively. When we book the deal, we collect 50%. Then we place the order with the factory. Again, most of our stuff comes out of Alabama. Now that's a bit of there's a section in the middle there that because everything's custom. It's not like you can just grab it off the shelf. It's about 6 weeks. Right? So just set expectations. Make sure everybody has expectations. We got a 6-week space between order and actual deal installation. Then we do the installation, and then of course step 5 is it's now yours. So you can able to go from there. All right. Referrals, right? So what do we do for referrals? Well, number 1, we do pay for referrals. We pay 10% of the deal. It's a $5,000 closet. You guys as agents talking $100 or something. So that's pretty good. But who makes a great referral, right? Anybody remodeling or renovating, right? Realtors, right? You're dealing with customers, again, people that are trying to sell a home, that are trying to differentiate that home, people that want to buy a home and say, I don't want to live in another house with wire shelves, right? Contractors and builders, interior designers, home service business, anyone that says I have no space or these wire racks, those are definitely our clients.
Or if the wire racks fall off the wall.
Yeah, we sold one guy yesterday, wire racks that pulled off the wall, right? And I don't know if you've ever had that happen.
Oh yeah,
to you in the house.
my wife
Yeah,
overloaded ours.
Overloaded.
Middle of the night. It's the scariest thing you've ever heard.
I mean, it's just they're not fixed to the studs, right? Just the drywall. You load them out, they're just gonna pull away. So yeah, his stuff pulled away on Saturday. I was out and about doing an install. He saw my van, which is all wrapped up, and he called us and he placed an order. So I'm gonna hand out and I got plenty a referral card, a little bit of information about us, and then at the bottom we've got referred by. So if you hand this out to a customer and say, hey, you're selling the house, let's differentiate it. Again, kind of keep in mind that there is that 6-week gap, right? And you want to make sure that you get paid. Place down here to do that.
Awesome.
Again, math is real easy. It's a $5,000 closet. That's $500 to you. So you want to just grab a few and pass them along.
Oh, I'm sorry.
I still have more. Okay. He's trying to Academy Award trying to play me off the stage.
So, there we go. Hold on. Oh, no. Don't start this on me now. Oh, we're good.
Right.
Oh, right. Hold on.
Oh, all right, there we go. So, hopefully this goes away.
Yeah, it shouldn't. So.
All right. So, our closet's a good investment, right? Anybody have any thoughts on that? Oh, there we go. So this is the 2025 remodeling impact report. The link is up here. Top cost recovery. Number 1 is a fancy new door, right? You got a lot of curb appeal with that. Closet renovations, number 2. So yeah, if you're looking to again differentiate your house in the market, or just looking to say, hey, I want to make an investment in my house, and do I get, I don't know, pool or closet? Choose the choose the closet, so. And here's some, we can do some great stuff. Sometimes it's really functional, sometimes it's high impact like this, right? I don't know, it's pretty. So wire shelves, we talked a little bit about that. That's the builder grade, new build, and people live with them for as long as they have. But again, people have a visceral hatred of wire shelves. So we can transform it into something much more functional and something much more beautiful. Here, laundry room, right? Boom, we went from a single wire shelf that doesn't really do anything to something much nicer.
I like it. I like it.
Yeah. And then again, we've all been in people's homes, we've all looked in the closets and it's like, oh,
It doesn't even have to be a big walk-in either.
no,
Like this one.
here's a reach in, right? It could be a kid's closet or whatever like that. It can do so much more for the even in the reach-ins. The reach-ins aren't that expensive, I don't know, $1,500-$1,800. You know, clutter, right? I mean, it's kind of these hoarder situations almost. But all right, keep rolling. Okay. New construction, right? Yeah, people are building their dream homes, and the builders either want to do wire shelves because it's easy, or they bring in a trim carpenter and it's very expensive. I think we can offer a third way to do that as
That
well.
looks good. I like that. I like the flooring.
All right. Pantries, right? There's some nice butler pantries out there that we can do. Even just kind of a reach-in pantry as well.
Off the curve.
Right?
The
Yeah.
curve shelves.
Yeah. And then we got some wire baskets. That's an option as well. So anyways, I'm here to talk a little bit about my business, answer any questions that you have, and hopefully with referrals, pay you. So, and here's my contact information. Again, my name is Kevin Perks. Everybody got, the things?
Yeah, you could leave some with us, so I'll leave some out there on the table so we have them.
Good. Any questions for me?
Well, that was perfect. My computer died right at the right time there.
There you go.
Perfect. Thank you so much, Kevin.
I appreciate that.
Yeah, I'll keep those. Thank you.
All right.
Appreciate it. You want to hang out? You can. If not,
All right.
all right, Miss April Blackwell in the building.
Hello, everybody. Awesome.
I'm sorry to have my clip.
No worries. Does this shade come down by chance?
Yeah.
Because I noticed that the glare is real serious, and like on this side, you're probably not going to see what's on the screen. And some of what I have to show you is very visual. So I want to make sure.
Okay.
Just of course. Yeah.
No, it's fine. We'll
Is there a way to get it on the screen as well?
hello. 1 second.
Yeah, sure. While they're getting this started, I wanted to do sort of an informal research poll. I want to know what you all are seeing in the marketplace in terms of days on market. Are you seeing them home sell quickly, fast, first weekend you have it listed, or are they taking longer than you would like them to sell? Longer. Okay. Any other observations?
There's no rhyme or reason.
Okay.
Some
So,
houses
mixed?
are getting 8 offers, and then other houses you think are going to fly are sitting for 60 days.
What are your buyer prospects saying? Are they looking quickly, looking at houses, make offers, or are they taking their time on making offers, having any type of hesitancy? Taking their time.
Yeah, they're not in any like.
And why do you think, what do you think about that? Like, why are buyers so much like sitting on the fence and not just doing an obvious home ownership is better than renting purchase? Like, why aren't they doing that?
Fear and uncertainty. There's a lot of stuff in the news. A lot of stuff.
Okay.
That wait and see aspect.
Yeah, okay. And then what about payments? Are payments affordability an issue for a lot? I mean, I pre-qual people every day, and it's sort of like a big conversation is around payment shock. We had a conversation with a gentleman a couple weeks ago. They're paying $1,800 a month in rent, which I think is a lot of money for rent, but for a home that was like in the low 400s, the payment was going to be like $3,200. So he had to kind of swallow the fact that if he wanted to buy, his cash flow was going to go up about $1,400 per month. And that's a real concern, right? Because I can tell him all day long, owning a home is a forced savings plan. Owning a home is going to generate you net worth long term. Owning a home is going to provide your family safety, security, et cetera, but at the end of the day, owning a home is a significant outflow in cash more than it is in rent. Now, also I'd like to find out, what are you seeing in terms of concessions currently? What percentage are homes selling as percentage of list price? Are they going at ask, below ask, over ask? Are sellers giving concessions to sell their homes? What do you see?
More concessions.
More concessions. As a percentage, what do you feel like that number is?
Honestly, it depends, in my opinion, on where the house is priced at in the beginning.
Yes, absolutely. But like in general, like is there a sense like that sellers are conceding like 2, 3, 4, 5, 6? Like, is there a number of percentage wise that you are seeing or you think that they're doing?
They're coming in lower than the price, but if I keep that on, it depends on, the home, the location, price point, things like that.
Yeah. And so the list price are already reduced, right? They started releasing price reductions and things like that. All right, awesome. So you guys are pretty much, seeing and confirming what I'm seeing and observing in the marketplace. Homes are sitting on the market longer. And then like, for example, like, as a mortgage professional, we may work with a client for months or years, and then they go new construction because they cannot give up a 4.99% rate.
So most of my clients.
And so, and how can you compete with that? Well, you can't. A 4.99 as a permanent buy down rate, you really can't. Like, you really want to find out where those builders are and really load them up. But if you have listings that are resales and you want to do your best to compete with builders, this is going to give you some ideas. All right, so we're going to go over how seller concessions can be used, give you some examples, help you wordsmith how to promote it. And then after this part of the seller concessions presentation, I'm going to introduce some keywords and phrases from Phil M. Jones, Exactly What to Say. Has anybody read Phil M. Jones, Exactly What to Say? Or familiar with it?
No. I've heard of it.
All right, awesome. More about that later. All right, so first of all, the terminology is really important to sort of nail down. What can seller concessions be used for when there's a loan setting, right? So the seller can fund a program to temporarily reduce a mortgage rate for a buyer. That's called a temporary buy down. They can spend money to permanently buy down the interest rate. They can use that money for closing costs and or prepaids or all of the above. So just depending on how much we're able to get out of a seller is going to really determine how we apply it. What's important is that that there are levers that can be pulled to help make a home more affordable and more appealing to a buyer than just a price reduction. And the more that those things exist, the more you can provide consultative services versus transactional services for your buyers and sellers. I keep wanting to go over here because the screen's over here, but my computer's over here. All right, caution. The total seller concessions cannot exceed the contribution limits for the loan program. Okay, and I have an incredible handout here for you that I'll pass out at the very end, and it has a cheat sheet for loan program? Is it conventional USDA, FHA, VA? Is it primary residence, secondary home investment property? Is it 3, 5, 10, 15, 20, 25% down or more? Because how much the seller can concede in concessions other than price being applied towards loan, other than price, and anything else other than price or repairs or whatever, which wouldn't be included, then those have to meet this contribution. So if you go ahead and you negotiate something for your seller on a $500,000 sales price, and you're getting a $30,000 concession, but they're only putting down 3%, and the maximum contribution is 3% or $15,000, and you've wasted 30,000, or you've wasted half of that concession. Well, you wouldn't have wasted it. We would go back to you and say, you can't do that. Let's go ahead and adjust the sales price and then do something else. But you would have, you wouldn't be able to execute on that offer. All right. So as far as temporary buy downs are concerned, there are several potential ways to do it. One is a 3-2-1 buy down. This is exceedingly rare. A 3-2-1 buy down means the rate is lower by 3% in the first year. So let's just use the rate is, we'll call it 7%. Let's say if you do nothing, it's 7%. But if the concession was big enough, to potentially that rate would be 4% in year 1, 5% in year 2, 6% in year 3, and then in year 4 onward, it would be 7%. It would be its original term. That is a temporary buy down. It's not an arm, because that rate is always 7%. The seller is just paying into a subsidy that subsidizes the incremental difference between the 7% and the 4% every month. And it's coming out of a bucket. And what's really cool with temporary buy downs is that money goes into like a special escrow account. And every month, the difference between those payments is swiped out of that bucket, If there's a refinance opportunity for the client over the next 2-3 years or however long that temporary buy down is in place, and there's any money left in that bucket, it's credited to them when they refinance. Okay, so let's just say, I mean, in an extreme case, let's say they put $13,000 in, and you're halfway through, and they're like, you know what, I can refinance at 5% fixed now. I'm not going to wait for my rate to adjust to the higher rate. And say there's like $5,000 left in the bucket at the time you do that. It would be a principal reduction on their refinance. So when you refinance, you typically roll closing costs back in. So it helps to offset adding those closing costs back. If you're lowering that loan amount, adding closing costs back in, it's pretty much absorbing that difference. All right, a 2-1 buy down. This is one you hear the most about on TikTok and Instagram, at least on my feed. You always do 2-1 buy down, 2-1 buy. So same thing. So if we're using 7% as our rate, 5% in year 1, 2% reduction. In year 2, we go to 6, and we step into 7% or higher. Okay, this is popular because you get that magic rate that's under 6%. Like anything under 6 sells a house, and it just makes things way more affordable for a buyer, way more attractive. So you get to that 5, which is under 6. What's really great about temporary buy downs is that your most expensive years in owning a home are your first couple of years, right? You're moving in, you need furniture, you're probably making repairs, and you just need more things to get the home your way, right? You're painting it, just buying closets, all the things. So having that temporary reduction in that payment is awesome. Also, what happens over time, generally people get raises, right? So say they're making $100,000 a year, they get a 5% increase, they're making $5,000 more a year now. So which means, their monthly paycheck is going to be up about $400 per month. So you would expect that with pay increases, they're going to be able to take on a little bit more of that higher payment, help them step into that while we wait for rates to come down. Now, a 1-1 buy down, this is one you never hear of. You never hear of 1-1 or 1-0. You don't ever hear about them, but they do exist. What I love about these options is that they're affordable to the seller. So if you don't have a big concession to work with, you can at least help the buyer out by temporarily reducing that rate. So on a 1-1, it would be reduced by 1% for the first 2 years. So 1% reduction in year 1, 1% reduction in year 2. So it'd be 6%, 6%, then 7%. Again, we're down to 6%, which really helps. And this is just assuming that you're not also using some money to buy down the rate. You can buy down that permanent rate to say 6.5% and then fund the temporary. Now they're at 4.5, 5.5. Make sense? We can like mix and match these, whatever we can do. 1-0 is it's even smaller concession to the seller. It's just a 1% reduction in the first year. That's it. And again, but any little bit can help somebody when they're just getting started. All of the temporary buy downs must be fully funded by the seller, 100%. If the cost of that subsidy is $9,382.33, I need a sales contract that it's at least that much or more. You can't give me a sales contract with an $8,000 credit because nobody else can fund it.
The buyer can't.
No, it has to be 100% funded by the seller.
I have a question.
Yes.
And not to get off topic.
Yeah.
What's the difference between this and then if I just wanted to get a mortgage and we bought down points?
Yeah, that's a permanent buy down.
Okay.
So for a permanent buy
Okay.
down,
Okay, I got it.
so for a permanent, anyone can pay points in a permanent buy down. Okay.
This is just in
Yes.
temporary buy down.
In temporary,
Okay.
in temporary buy downs, they are seller funded only.
Gotcha.
Okay. There are some lenders that do lender funded, but when you look at the math, they don't make any sense. So they upcharge the rate to then give you this premium to then pay for it, and then it's like you may as well not do it. So like the lender paid programs are garbage. The only way to really effectively do this is to negotiate with the seller for the seller to do it. And then also caution, the total cost cannot exceed the contribution limits. I think we had mentioned that earlier. So why are these alluring? Like why is this such an important topic to be discussed right now? Affordability is the #1 problem. We are like at the lowest affordability in history. So even when interest rates were 18% in the 80s, the average sales price was $50,000. So like, you know, affordability was a crunch then, but it's like really a crunch now. Incomes have not kept up with the growth of home prices and what the payments are. I mean, people are spending over 40% of their gross income on housing payments and higher. And a healthier budget would say that 25% of your gross monthly income should go toward your housing. But if we were to keep to sort of conventional wisdom and guidance on that, nobody would be able to buy properties. Almost nobody, except for the very, very, very high income earners. People are tapped out. Payment shock is real. I mean, y'all live in life, right? You're going to the grocery store, you're going to get filling up your gas tank with gas, like you're paying your bills. Like, I'm not the only one that feels like just sort of like that financial pressure, right? Your clients are feeling that financial pressure too. The cost of living is just ridiculous. Savings are dwindling. You know, credit card debt is an all-time high. I mean, it's like in the trillions. Like credit card debt is in the trillions. And the credit cards are maxed out. Now people are using these buy now, pay later things to pay for groceries. Like when you go to Walmart, you can scan something and do that. Did you know that? I just saw that the other day. I was like, what is this? So any offset to the buyer is attractive. If it's cash up front, that they don't have to come to closing, so they can save that money to go ahead and buy furniture and do those repairs and expenses, that's great. If it's to reduce the payment permanently and or temporarily, that's great. How you will apply it is going to depend on really what is most important to that buyer. And you don't get into that conversation with your buyers, and that's not your lane, but that is the lane for your mortgage provider. And it's essential for there to be intense collaboration between your mortgage professional, you, before you put in an offer. Before you put in an offer, you should know that loan program, how much money they're putting down, what your max seller concession is. You're already scoping out the property in terms of how long has it been on the market, What are comps saying? You know, how much should we offer? So like, by the time you've done that and you've collaborated with your mortgage professional, you should have an idea like, you know what, I think this home is, you know, we could probably get $30,000 off this price. Okay, great. Well, they can only use 15 for concessions. You use the other 15 on the sales price. All right, awesome. That way we go in together as a team strategically so that everybody can win. So we're going to do a quick exercise. We're going to look at the cost of at 10. We're going to take it 10,000. We're taking $10,000 on a $500,000 sales price, and we're going to compare it to a price reduction, a permanent buy down, spending it on closing costs, and doing a temporary buy down. Okay. All right. So first, this is the part I really would like for you guys to see. So this is a 2-1 buy down. I got rid of the 3-2-1 buy down because the cost for it exceeded the maximum concessions for my scenario. And it was really, really expensive. But anyway, it was just, well, I was using a $10,000 scenario and it was like $13,000. So you could, if you could negotiate $15,000 on this property, you could do a 3-2-1 buy down. But for this exercise, I'm sticking to the 2-1, 1-1, and the 1-0. So for the 2-1 buy down, it costs $9,318 to the seller. Okay. But they get a rate of 4.99 in year 1, 5.99 in year 2. It saves them $513 a month in the first year. It saves them $262 in the second year. In the 1-1, it only cost $6,309 to the seller, and they're getting a 5.99 rate for the first 2 years, and that saves them the $262 each month for the first 2 years. The 1-0, this only costs $3,154 to the seller, and they get a 5.99 rate in year 1. Right? It's like a little tiny token. All right. Over here, we're just going to reduce the price. So here's the price at $490. They're getting the 6.99 rate. This is what I'll call it. This is like one size fits all. This is like what most people will do without putting any thought to it. This is what most people will do. And that doesn't mean that they're doing anything wrong, but this is the way we would most likely see it. So I know you guys probably cannot see it over there. The payment is $3,105 per month. Now this is on a $500,000 property being reduced to $490, and they're putting down 20%. So we're only borrowing $392. I say that like, you know, whatever. Okay.
Can you give us a blanket like estimate of, because I have this script in my head of basically what we're going through, and I say, okay, we could either reduce the price by $10,000, which will save us how much a month estimate?
Yeah.
What would you say per thousand, or how much per, you know?
All right. So in this example right here, we're comparing it. So this is showing it compared to applying it just to closing costs, applying it to permanent rate down, because it depends on what you're comparing it to.
I'm just saying, like, if I'm trying to convey the cost or the savings.
Yeah.
So usually it's like per thousand, it's like $8 on your mortgage.
Sorry.
Okay. Sorry if I was confused.
No. All right. So if we're talking about say a 7% rate, it's just easier probably to just do $7 per thousand.
Is that's what I usually use, about 7 or 8
Yeah.
per thousand.
Yeah.
So at a $10,000 price drop, I tell my clients, you're
It's gonna
looking at only
save
saving 70 or 80 bucks
Yes.
per month on your mortgage.
Exactly.
Okay.
Yes. Thank you. I got it.
Sorry for confusion,
So,
but that's the
does that make
part of the
sense?
script.
So for every $1,000 reduction in price, we're also assuming that the loan is being reduced in tandem, right? So that means they will save roughly $7 per thousand on their monthly mortgage payment. Okay, it might be like $6.75 per thousand, but
just estimate.
Use $7 per thousand. So in this case, their payment's $3,105, and these payments include taxes and insurance. The cash they need to bring to close is $105,867. Over here, we have the $10,000 is being applied to closing costs. Well, the closing costs weren't a full 10,000 at 6.99. So they get a small reduction in rate at 6.625
Why is that?
because there's the closing cost didn't meet 10,000. They're not getting, they're
So
not.
they had some extra money to
Yeah,
find
yeah.
out.
So you're like, okay, we have a little extra money out of that. So we'll do a partial buy down in the rate. It saves them $44 per month. But some people just like, just a little tiny savings just goes a long way for them. Now here we're taking that $10,000 and we're directing it towards points. This has a little bit less than $10,000 in points. So that gets them a rate down to 6.375. So that's like almost 5/8 off of the top without doing anything. That saves them $110 per month than if they did the one size fits all. And then in the temporary, so you get that rate at 4.99 in the first year on a 2-1, that saves them $460 per month for the first year. And then it will step up to that 5.99%. So which one is best? Well, it depends on what can you get, right? You may not get anything like, they've already done the price reduction. It's too late to go back now. And, now there's multiple offers. So they did the price reduction. So then, they're going to have to bring their own money to structure a lower rate. But for the other ones, the mortgage provider and the client can have this conversation, like, what's most important to them? Is it getting that lowest possible payment, whether it's permanently or temporarily? I will tell you this. Most people are doing this option. They want the lowest permanent reduction. We talk a lot about temporaries and they sound sexy, but consumer behavior is that they want this permanent. So why am I talking about something that may not be super big,
But if you really look at it, it's mind blowing because you're saving almost, so let's just say for the sake of math, that in the 2-1 buy down, you're saving $6,000 that first year. I'm rounding up to $500.
Yeah.
And then consumer behavior saying, well, we would rather save $100 a month.
Permanent.
You would have to make 60 payments though.
Yeah.
Before you realize the savings.
Yeah. So we've done a handful.
And that's 5 years. You're probably going to refinance in that 5 years.
Yeah. I totally get it.
Yeah. And you probably bang your head against the wall trying to explain this. Yeah.
But it all depends on what's prevailing in the news.
Yeah.
At the time. What's happening, and do people really feel like that they're not going to get better? So if because here they're going, yes, it's nice I have that temporary, but I have to worry about the 7% rate 2 years from now. And then that is just too much for them to consider. They're very risk averse.
Yeah.
These are tools in your pocket. You don't have to know exactly how they work or how they're going to benefit the buyer, but it is so important for you to have tools. The more tools you have to help somebody, just guide them in a conversation, pique their curiosity, to get them interested to move. Great. By the way, while you're listening, I'd encourage you, if you think of somebody that you need to share this information with, a cold lead, so just a reason to call somebody, whether it's a cold lead, cold prospect, somebody who's on the fence that you've been talking to a long time, a listing that's been on the market for a long time that needs to move. Like, write these people's names down so that you can follow up with them later. All right. So here's some wordsmithing ideas to promote it. Just plainly, seller is offering $10,000 credit to buyer. Use as you wish. Use it to save on your closing costs, buy down your rate, or reduce your payments. Our preferred lender can show you options that best fit your budget. Save hundreds on your mortgage payment in the first year. Our preferred lender can show you how. Save $10,000 in closing costs with a seller credit. Our preferred lender can show you the details. Save 2% on your rate the first year. I don't know, maybe you test it, like, you just do different ones.
So I know that you'll be able to answer this better than my knowledge is, where do we draw the line where we start to get in trouble when we're advertising?
This is what I'm going to say. These are your safe.
Okay.
I would not
quote rates.
You would not, this is saying save 2% on your rate. It's not saying what the rate is.
Yeah.
Because here's the thing, you have no idea what your client's credit is. You have no idea what they're going to qualify for. And it's just, just don't.
Can you explain to them why I asked that question?
Yeah, okay, so there are regulations on advertising. And when you advertise a particular interest rate, you have to provide all the terms. You can't, whenever there's a number in an advertisement that indicates rate, payment, cost, whatever, you have to provide all of the information. So like your compliance would be like, just blurb would be like, this assumes a credit score of 780, on a 30-day rate lock, on a conventional loan program with 20% down, on or by, just, these would be like, sort of like what I feel would be universal, that would stick perennially, and that they just kind of keep you out of trouble.
Gotcha.
All right. Any questions about anything we've
I
talked
had
about?
one more.
Yeah.
I wanted to ask you about that, about quoting savings and quoting percentages. There was something else though.
So this is the handout that has the cheat sheet for you.
Oh, yeah, I've got
Okay.
a good question too.
Yes.
And it may be different now because I think that a lot of builders are just eating the costs.
Yes.
There used to be, several lenders that I knew used to tell me, be careful. And this was a couple years ago when, preferred lender, get a special rate, blah, 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 blah. And lenders would say, show me that quote, and I could show you where they're getting that money back, so to speak. Is that something that's still relevant? You can look at a quote from a builder's lender and say, okay, I can see where they're charging you a little more here, or there, or is it just that builders are really just eating the cost?
I mean, the quick answer is builders are spending millions of dollars to sell properties.
Yes.
I mean, there's probably I would say an average concession on every house of probably like about 10% off that sales price. And then what builders who own their own mortgage companies can do, that your friends that work at, these, Fairway or whatever, what they can't do is that they purchase these forward contracts in the marketplace. So which means they're able to like buy down wholesale rates because they're committing to Fannie Mae, Freddie Mac, the end consumer of the mortgages, that we're gonna deliver to you $200 million worth of mortgages.
Yeah, because they're selling their own community.
Yeah, exactly. And then here's the thing, like I can get upset like at somebody for doing that. And if that's the home that they want and the community they want, great. But if you want to be able to compete with that on the resale, you've got to coach your sellers into being, very competitive, especially if it's a unique property, if there's
Competition.
competition near the area, and it's been in the market for a while. You just got to get creative.
Yeah, I had a buyer go into construction and the builder rep straight told me that the builder spent $30,000 buying down the rate.
Yeah. I mean, we used to be able to compete with, like you said, a couple of years ago. Their mortgage companies weren't that great. They would just charge higher rates.
And then
then
$3,000 in closing costs.
If the concession was less than $5,000, we could compete with that. But these days, I mean, the big builders, they've nailed it down. There's smaller builders who are just like, they're just friends with whatever. They're not doing that. Like those, they might be controlling it by, in the design studio or something like that to make it, creative, but they're not getting like 4.99% rates. All right. So this next part really is like, it's like at least an hour. I'm gonna have to breeze through it. I'm coming back in July, right, Nicole? We haven't picked a date yet, I don't think, or did I not respond? What did we come up with?
Okay.
Yeah, so I'm coming back in July and we're gonna spend more time on exactly what to say. I went out to California in January and spent 3 full days going through, this was our training workbook here, with 2 exactly what to say guides. The Tina call with EXP, she actually had Phil M. Jones himself come to her team, I don't know, a year or so ago, and he trained them personally. I mean, so like exactly what to say. And Philip Jones, if you haven't heard of it, Google, and I'm sure you will find him on a YouTube video or a podcast with somebody that you do know that's in your industry. Because he's been interviewed by every real estate mega influencer and every mega influencer in the mortgage space as well. So there are a total of let's see, 30 or more phrases or magic words on what to say to really lead and guide conversations. So what I did was I'm pairing the exactly what to say with selling seller concessions to your seller. It's like Sally sells, she shall. All right. So the reason why a book like this is so timely, important, and relevant is that timing is everything. We've all been there when we're driving away from a meeting and I should have said this. I should have said that. Why didn't I say this? I was ready for it and I forgot about it or whatever. So having keywords and phrases like that, when you hear trigger words from your sellers or buyers, you can come back on the tip of your tongue, an introductory phrase, and then you can say whatever else that you need to say. I grabbed this. This was like I was listening to an interview with I think it was a women's basketball player, and she said that her mom taught her proper preparation prevents piss poor performance.
Mhm.
Thought that was the best, and I wish I remembered her name, but I just was like, that was fantastic. So this gives you words for every scenario, and the important thing is that you want to practice. So the worst time to think about something is when you're going to say them. And then my quote, shower time doesn't count. Like we can have a best, I have the best conversations and solving the world's problems when I'm in the shower, but nobody's there to listen. Nobody's there to listen. All right. So here's the thing. You have the exact same conversation with buyers and sellers all the time. There's very little variance. Yes, their perspective, their needs, their point of view, their philosophy, all that is going to be different person to person. But in general, they all have the same questions, concerns, fears, and so if you haven't yet taken the time to write out like objections that you hear or comments that you hear, you should take the time to do that, because you will find or the next conversation you have and you find yourself saying something on repeat, write it down. Like, okay, I'm noticing that I'm saying this on repeat a lot. Start taking notice and maybe collect them together so that way you're really incredibly prepared the next time something similar happens. So we're going to go over part 1, rejection-free openings, perspective changers, and assumptive phrases. And I'll come back part 2, just labeling, staying in the game, and making conversations count. Now, some of these words and phrases will sound sassy, passive-aggressive if you don't do it the right way. So it's very important. And this is like, I'm reading a book on relationships with your children right now. This is like so important. Empathy and curiosity. Empathy and curiosity. You have to stay calm, curious, and empathetic, because sometimes they don't know what you know. And you can have this reaction like, that's the world's dumbest thing to say. And you like, or that's the world's most offensive thing to say, and you can kind of get offended and say some of these things with the wrong tonality. So, so just keep this in mind, because if you read these before I say them, like, you're like, that sounds sassy. All right, this one's not sassy, and I love this one. Honestly, this is as soon as I left training, I've been using opening fact question. I use opening fact question the most to warm up cold leads. Okay. I used one yesterday. I had a client that did not choose me in 23, but I reached out to him because I knew he bought at a time when rates were like in the really high rate down. But so I reached out to him and I said, hey, this is April Blackwell, Blackwell Mortgage. I helped you with a pre-approval in 23. have you refinanced yet? Okay, so it's opening. Hi, it's April, blah, blah, Blackwell Mortgage. Fact, it has to be a mutually agreeable fact. Like, this is true. I really did pre-approve you in 23. Easy question to answer. Did you refinance? Hey, you filled out a form at an event that I attended. You filled out an online form asking information about your property value. We had a brief conversation a couple of years ago. Did you sell it? Same thing. Did you buy? I love opening fact questions. There's nothing you've remembered.
And even to take it one step farther, I see that it's a lot more effective when you don't. And I know you did ask a yes or no question, but when you don't ask a yes or no question, it requires a simple response that actually is a thought.
So this one, opening fact question, it is a yes or no.
Yes.
So the way it is designed, it's like this. It's so there's a lot of like science and stuff, neurolinguistics and things that have gone into like how these words and phrases work, because you want to know that yes or no, and you want to start easy. Like if it's somebody you haven't talked to and they forgot who you are, you want to start really, really easy, because there's plenty of opportunity to give them these, make you think questions. So in the respect of seller concessions, hello, seller, as you know, your home has been on the market for 30 days and we haven't had much activity. Home affordability is the culprit here. Could I share some ideas with you that I think will help us market the property better? Well, sure. Yes, of course. And then another rejection-free opening. And this is awesome, you guys. I love this one. I love all of it. I'm not sure it's for you, but I'm not sure it's for you, but there is a strategy that could help get more eyes on your property I'd like to discuss with you. Okay. I'm not sure if it's you, but a listing just came open, or my colleague is having a coming soon, or whatever it is and the reason why I'm not sure if it's for you, but is it takes out this sort of salesy thing. It's like, I'm just sharing this with you. It might not work out for you, and it's okay to say no.
It sprinkles in a little bit of FOMO too, a little fear of missing out. What do you mean not for me? What kind of person is this?
That is exactly, that is the trigger. That is a neuro response.
Yeah.
Okay, here's another one. Another neuro response, same to your point. How open-minded are you? Well, who in the world wants to be known as being closed-minded? Nobody. Not even Archie Bunker, So some of you might not know that pop culture reference. Others are like, yes. Anyway, how open-minded are you to adding a concession to incentivize buyers to consider your home? It would make it more affordable to them. How open-minded are you? And they're not going to shut you down with that. Who do you know who has had, so who do you know is the phrase, who has had their home on the market recently and took it off the market? Okay, maybe this is a way for you to either compare and contrast why their home didn't sell, or an opportunity to get a lead. Somebody was trying to sell and took off the market. Well, why was that, right? Going on, perspective changers. All right, this is where I think the tonality, if you're not being really, really empathetic and curious, can get sassy. This is when somebody pretends to know more than you. Okay, or they seem to be stuck in their mind and you want to persuade them, okay, to at least be open to your point of view. What do you understand about how a buyer could use a seller concession? Like what do you understand about how you could use a seller concession? In our training, they said, you would like cock your head to the side so that way you remind yourself to be curious. And so, what do you understand? But otherwise, you can see how. What do you understand? I mean, like, that to me is like, I was like, what is your experience with marketing a home and an affordability challenged market? Last time I sold my home, I had 50 buyers. I don't know why can't you sell my house now? Well, I mean, what is your experience with selling your home in an affordability challenged market? Like, this is a unique market. How certain are you? That's the phrase. How certain are you that the right buyer will come at the current price in the next week or so? Here's the typo there. I probably see my typos. I'll just not point out. Okay. When was the last time you sold a property? Maybe it's the first time you're selling. These are all the same questions, like just, these are like the words at different points in time that you could use. All right. Additionally, how important is it that we sell your home by X date? How important is it? Because maybe they're fine just letting it just hang out here forever. Could it be possible making the home more affordable to a buyer will sell the property? Golly, I was like, must have been drunk when I was like writing some of these. Could it be possible? I don't drink, but I'm just saying, okay. Could it be possible? Could it be possible? So I love the could it be possible? Because this is somebody's like, I'm like, going, no, we want our price at this, but could it be possible that if we just tried this, we could attract a buyer? How would you feel if we sold your home within the next 2 weeks? How would you feel if we did that? Oh, that's great. Well, how open-minded are you then to adding a seller concession to make that happen? Just imagine how great it will be to be able to move on with the next chapter of your life. Just imagine. It gets people off of their present and thinking about how they really want to move forward. If I can, then you. If I can, then you. So if I can sell your home with this strategy, then would you introduce me to some of your friends looking to sell? If I can negotiate this offer for you, get it accepted, would you refer me or whatever? If I can, would you? Assumptive phrases. Oh, I love this one of these coming up. Okay. When would be a good time for us to schedule your consultation? Instead of like, this is like a swap. When would be a good time? That's like, it's assuming that there is a good time. Like, when would there be a good time? Otherwise, people normally say, there's something that people normally just say, I'm off that, but I'm guessing you haven't gotten around to reviewing the proposal I sent you. I'm guessing you haven't gotten around to it. This allows them to save face. So you've sent somebody something, they've not responded to it. I'm guessing you've not gotten around to it. All right, this is amazing. Y'all, this is like another one. This is like, it's called like 3 options. As I see it, introducing, as I see it, you have 3 options. Okay. And then the number 1 is a terrible option. Okay. Number 2 is a not so bad option, but number 3 is the right choice. Okay. So like you're going to give them these 3 options, but you're really guiding them to the right choice. As I see it, you have 3 options. You can keep the price where it is and take a chance. Number 2, you can take your chance with a small concession like $5,000 and see what we can attract. The right choice, offer a concession of $10,000 to really attract a buyer, or 15,000 or 20 or whatever the number is. All right, there are 2 types of people. There are 2 types, and people want to be in the right group of people, right? There are 2 groups of people. There are people who are set on their price and don't budge and are fine to wait as long as it takes. And others who are flexible, make a little less, but they get the peace of mind that comes with releasing the property so they can satisfy their why for selling in the first place. Which are you? Are you just comfortable just as it's like, have no end in mind? Or are you the type of person who just wants to move on with their life and feel peace and satisfaction and make, potentially make a little less on the sale? I bet you are a bit like me. I bet you're a bit like me. People want to be the same as others. I'd rather do whatever it takes to save headspace and move forward to the next big thing in my life. I bet you're a bit like me. You just want to save the headspace and not think about this. Okay. Swap concession to buyer incentive. So instead of using the word concession, let's talk about a buyer incentive. Let's talk about a buyer incentive plan. I've got a bit buyer incentive. This is how I propose. I propose we take a small concession, like say 2% of your sales price. By the way, 3% in concessions is generally going to be workable for all loan programs and loan types and occupancies. Only exception is investment property. In investment property, the maximum you can concede is 2% in concessions. Okay, so, but if you're, talking to the seller, if you start off with like 2%, like of the sales price. I have a buyer incentive program, we'll start with, $10,000 and market it to help lower your buyers. Know your market, know your demographics. If you're in a real high-end luxury program, probably if luxury neighborhood, they probably don't care about payments as much. If you're in a residential neighborhood that's more working class families and things like that, incentivizing them on payments. So just know where you are with respect to that. All right. So the QR code to buy, by the way, I do not work for Phil and Jones. I just do this as a way to share knowledge to help you grow. But I encourage you all. There's the general one. Now this is my workbook, so it looks different. This is the general one. This was the first book. And then he partnered with somebody in the real estate industry, like a top producer out in California or something like that. I'm trying to remember who he was, but and they partnered and they created a field guide for real estate. So this is exactly what to say, but all real estate specific terminology. So that's what this QR code and the one that's on your sheet will take you to. Okay. And if you buy it on that QR code, I've got it set up to where I'll get a small commission that goes into my nonprofit. So I have a nonprofit called 1313. I donate when I close a loan, I put funds in there, and then we give money back to the community through nonprofits that we serve. So if you purchase it on this link here, I'll get that. It's not like a Phil and Jones thing. It's just something like through my nonprofit, I was able to get a share link like that. All right. So just a little bit about me. I save deals, I make things happen that otherwise would not happen because of my consultative approach, because of the time I spend with buyers and how I work to educate them to move forward. I'm a broker, which means I work for clients and not for a particular employer. I have a wider net to help more of your clients. I'm a strategic partner. I help you in your business with tools and resources. I lead your clients through the entire process and fully prepare them so they can shop in confidence, and I make you look good. I make you look really, really good. So this QR code is also on your sheet. It's just sort of like, a little more information for us to connect, some information about my business there for you as well. And while you get to that, you get to my website, you can browse around and learn and see the other things that I have to offer. So I know we're off over a little bit on time today.
You're fine.
Are you sure? Okay, awesome. Any questions, thoughts, commentary?
No. It's great information. I mean, even seller side is one thing. The buyers don't even know that this stuff exists. I mean,
Yeah.
let alone a seller knowing that you could offer this stuff. I mean, it blows my clients' mind when I tell them now, especially in this market where concessions are a thing, they haven't been in the past.
Yeah.
And I'm not talking about like a couple thousand worth. You can get significant concessions and really help out your clients financially.
Yeah, buyers aren't aware because if they go online and get pre-approved, they're not talking to a human being.
Mm-hmm.
There's no advisor. The outside of your building says real estate advisors, right? Can somebody get your experience and expertise just by going online and doing? No, they can't. They can't get that either at a local bank, credit union, or online. They really have to work with a consultant, a mortgage advisor, somebody that's going to coach them through that process. Most people in my industry are going to do a one-size-fits-all approach. They are going to assign an interest rate and a set of closing costs to the buyer and just say, this is what it is. Whereas we customize that plan. We build the suit, right? We customize that mortgage plan for their budget. And so before we release them to pre-approve them, before they look at houses, I have a process that I go through. You have an initial consultation. It's like I call it a quick chat. Then they apply. Then that's like my design process, my analysis and design process. And then we have a follow-up consultation that's about an hour long. So you have a buyer consult where you have to, do buyer agency paperwork and things like that. In my consult, I'm teeing them up for you. I'm talking them about realtor compensation. And, like, it's not much something to really be concerned about in this market, but you just can't like expect 100% is going to be paid for by the seller. So I prepare them that, you have to know about this. Also, one thing I wanted to mention, if you have to negotiate, like whatever you get in concession for your compensation, that's separate from compensation or concessions and incentives to the buyer. Just so you know that. So we take a comprehensive approach to consulting our buyers every time, so that way when they hear it from you, when you're going over your paperwork that talks about compensation being decoupled and how much you get paid, they're not hearing it for the first time. And if they've met with you already, then I'm supporting you by confirming, like, that's not the only agent in the world that does that. I would love your feedback. So I'm also going to give you this. You can fill these out for me and leave them behind. I did notice that my flyers are already on the table over there with Blackwell Mortgage on it. So you're welcome to get in touch with me on that as well, as along with the QR codes that you have here. And if there's, a topic that you are interested in and like to know more about, please put it on your feedback form. Yeah.
7-9, if that works for you. That's what we talked about.
Okay, perfect. Yeah. Awesome. So I'll be back July. Yeah. Bobby, thank you for training.
Awesome. Thank you so much.
You're welcome.
Just a reminder, everybody, if you still need CE hours, I've got Jen up on Friday here at the school. We've got an elective next Wednesday at 1 here. We also have some stuff going out in Fayetteville. Don't wait till last minute if you want to get it out of the way. And also, reminder, Adams Homes is having their grand opening party at Kipling Creek. So Travis Ennis, that comes up to the school all the time and supports us. He's having a grand opening from 12 to 2. They're giving away a bunch of stuff too. Yep. So I think they're giving away Hurricanes tickets, they're giving away gift cards, they're giving away a bunch of stuff. So if y'all want to hop on over there.
Please, if you can. He's here for us all the time. Where is it?
Kipling Creek. I mean, it's a bit of a drive. It's about 30 minutes from here. It's a little south of Fuquay.
Oh, I think it should be fine because Travis himself is a lot.